so we are talking to builders, but here's the person on the other side of the table, which are investors, people who really fuel the crypto market and power products and really make a lot of this possible. So with me is GM from Dragonfly Capital. Dragonfly, as you guys might know, is one of the biggest crypto investment firms out there, managing billions of dollars across layer ones, DeFi applications, and other interesting products on chain. GM, you started off in Chainlink in the product side. And what are some key engineering lessons that you took from there, which you now apply to your investment thesis?
Yeah, thanks for having me. So yeah, I started my career in crypto initially as a software engineer around 2018, building an EVM, high-performance EVM chain, and then later around 2020, 2021, that's when kind of DeFi summer and the MEV space got really competitive, and that's how I started participating and then joined Chainlink. And so back around in 2020, I was building Chainlink's MEV product, which was called Fair Sequencing Service. So the idea is transaction sequencing for other chains as part of the Chainlink's product suite. And yeah, my role there was a software engineer and kind of the product lead on that. And then I later made the transition over to the investing side around 2021 and joined Dragonfly. And so yeah, to answer the question, kind of from that personal experience as a developer moving over to becoming an investor, perhaps like especially in crypto, the biggest lesson that I learned, if you look at just everything, all the assets we have in crypto today, is particularly like in the past 3 years, I think it's become pretty clear to me that I view crypto in some sense as Bitcoin really is like very special. It's in its own category. There's clearly the moneyness and the network effect around the asset, and clearly all the governments around the world see it very differently by putting strategic reserves into the asset, and then everybody else is more or less broadly in this technological platform kind of bucket, right? And so if you are a tech platform and if you're a software platform, fundamentally you need to constantly evolve, and you cannot stop. And part of the lesson there, we were chatting about this backstage yesterday, was a lot of you might have heard there's a lot of disappointment about Ethereum, the main chain in the markets over the past 3 years, and the main criticism was that it didn't really evolve, right? Like as a technological platform. And so I think like my philosophy as a software engineer coming from that background is like software like really dies the moment you stop like evolving and iterating. And so like people said 3 years ago that Ethereum has won the race, Solana, there's no chance it's gonna come back from the dead, but look where we are now today, right? And so Solana has been the kind of one of the runner-ups, like in the broader developer ecosystem, has gained significant market share in the market. And so yeah, perhaps that was like one of the biggest takeaways that I had, particularly in the previous market cycle, from 21 to today.
Whole bunch of lessons in there. What kinds of companies or sectors are you looking at right now, as Dragonfly, or investing in maybe?
Yeah, so for broader context, Dragonfly, we're a global crypto fund, and we focus exclusively in investing in crypto companies and crypto protocols. So we started out around 2018. We're currently on to our 4th venture fund, and so we're primarily venture investors investing in kind of early stage companies. And kind of the biggest sectors that we pay attention to are kind of 3 main categories. Number 1 is exchanges. Number 2 is layer 1s, blockchains. And the 3rd category is stablecoins. And the rationale there is pretty straightforward, is those are the 3 biggest winning categories like in the space. And so for instance, if you look at exchanges, obviously all the centralized exchanges dominate the market when it comes to revenue and when it comes to users. And like even if you look at the leading decentralized and on-chain venues like Hyperliquid, they generate annualized around 700 million, right? of revenue, and that's like still only around 20 to 30% of what the entire centralized exchange market is making. And so that clearly is a huge market. The second category, obviously, layer ones and blockchain infrastructure. That is fundamentally, we view that as a technological platform, and obviously the space has seen significant shifts in terms of scaling, in terms of usability, from the early days of Ethereum to what users are trading on and using on today. And so, and scaling, like I alluded to before, it fundamentally is a hardware and software problem, and there's just never like the winner is never set in stone, right? The game is constantly evolving, and you have to be constantly prepared and thinking about how do you bring your platform to 10x and 100x in terms of scale. And the third category is stablecoins, and it's also obviously the talk of town right now. Yeah, it's also one of the biggest winning categories. Tether, I mean, if you look at them, they took away, what, 13 billion in net profit last year. Circle, which just went public, they did much smaller. It was around like 200 million in net profit last year, but they recently went public, and clearly the market has huge appetite when it comes to stablecoins. And I think clearly the public market is finally now waking up to how powerful and how disruptive stablecoins and kind of the underlying technology of blockchains are, like how valuable they are. And so those are the three big, clear categories that we've been actively investing throughout the history of the fund. But I think kind of evolving beyond that, fundamentally, blockchains, they're ledgers, right? We've seen the dominant use case and the winning use case has been trading, and that's why exchanges, layer ones, and stablecoins have been the winning categories. But there's also no reason why it wouldn't be able to power different use cases. And so at the edge, there's other categories like DePIN and other use cases that haven't really fully proven themselves like as a mature category, but we're actively investing in as early stage and venture investors.
Thanks for that. That was a nice view of the stuff you're looking at right now. But here's a question, right? You obviously get a lot of inbound requests from founders asking for capital to invest in their companies. What's a few key advices that you give these people to succeed? Because there's a lot of founders in crypto and very few companies that really make it beyond 2 years. What's some advices that you give them out to them?
Yeah, I think right now is perhaps the best time to start a crypto company. And the reason I say that is because, one, there hasn't been a better time when it comes to regulatory clarity and how healthy the overall environment is today, right? Like if you ask a crypto founder, especially if you're US based 3 years ago, most of those guys came to Singapore because it was just impossible to build a DeFi protocol or build anything that's substantial in crypto 3 years ago with the previous administration. But now we're clearly in a much better environment. Now when it comes to more concrete perhaps suggestions, I would say one thing that recently has become, I think, very clear to me is if we were to look back in the history of crypto, particularly around 2017, 2018, the early ICO days to 24, to let's say the DeFi mania, 2021, the NFT mania, and then 24, 25, let's call it the meme coin and mania, and perhaps the stable coin, the excitement around stable coins. I think what's clearly defining to me is previously the market has rewarded a lot of rewarded projects or founders on raw ideas, in the sense that as long as you had really good ideas and it's innovative, it's new, it's something that people haven't heard about or haven't seen, then the market would more or less likely you're going to be rewarded by the market. But I think that's getting really competitive right now. And so again, if you look at the example of Hyperliquid, which has been one of the leading examples, it's clearly, I think we're clearly shifting towards a regime where not only do you need your product and your story to be innovative, to be new, but also you need very strong and clear product market fit. Right? And so in the Hyperliquid example, the reason there's so much excitement really comes down to the fact that it's an exchange. It's simple to understand. It makes $700 million of revenue a year. Over 90% of that is used to buy back the token and burned under the assistance fund. And so there's a clear and easy to understand story for investors, for traders, for everybody in the ecosystem. And so I do think if you want to win in this market in the next 3 to 4 years, build for product market fit, right? Build a product that people want to use, show revenue, and think about how that revenue would translate into growing your ecosystem potentially via all of these mechanisms. And so yeah, that would perhaps be the biggest shift, I would say, in the overall market 3 years ago, if someone were to start a crypto startup compared to today.
Yeah. There you go. Keep that in mind if you're planning to apply to Dragonfly Capital for funding. You said the 3 best businesses are exchanges, blockchains, and stablecoins, right? So who are some people or folks who are really nailing 2 out of 3 of these aspects? I know Jeff at Hyperliquid is one guy who's really, but that's more on the deck side. Is there any other people who you really sort of look up to in terms of the products that they've built out?
Yeah, that's a great question. I think there's exchanges, stablecoins, and layer ones. In some sense, they have a very strong synergy, right? And we've seen leaders or winners from each category move to the other categories, in the past couple of years, right? So centralized exchanges, the Binance, OKX, BitGet, Bybit, all of them, have their own chain, either an L1 or an L2 in some way, shape, or form. And a lot of them have tried to launch their own stablecoins as well, to different degrees of success. And then we've also seen winning kind of blockchains really win by kind of the leading or the dominant exchanges that's on their chain, right? Even if you to look at a general purpose platform of, let's say, Ethereum, there's Uniswap, Solana, there's Meteora and all of the on-chain dexes. And same thing goes for stablecoins as well. I think the space is getting clearly very competitive in that. Again, if you look at the kind of first movers, Tether and Circle, all of the revenue they're making, they're not giving it back to the end users, right? And so the 13 bill of net profit Tether took away, or took home, was essentially over the kind of interest income, right? And so that was not transferred to the users. But we're seeing new startups, thinking about ways to give that yield or give that interest back to the users as a way of new way of acquiring users. And so, yeah, and we've seen also leaders such as Athena, which has been a shining example in terms of DeFi and stablecoins on Ethereum in the past couple of years, launching Converge and launching their own exchange and their own chain as well, to tap into kind of the broader exchange market. So yeah, my view for those three categories is the theme really is convergence, that everything is going to converge, and I think it really just comes down to who is going to win as a product, and can you win over traders and win over users. And so it's going to be a very exciting time to see all of the existing players converge to a very similar form of product and compete against each other.
Thank you for that. Now, for something that I'm sure everybody's waiting for, the XRP ledger, what are some technical updates that you're following or looking forward to? And just what about this? How do you view this network and its ecosystem, from a Dragonfly perspective?
Yeah, I would say I'm personally most excited about the EVM side chain, and the reason is I obviously came from a background of building a EVM layer 1 around 2018, but kind of for context, right? EVM is the Ethereum virtual machine that is the dominant developer platform or the virtual machine that developers in crypto use today, right? So you can look at this from a lot of metrics. One, if you look at the amount of capital that's being secured in Solidity, which is the programming language, the dominant programming language for the EVM, Solidity secures around 170 to 200 billion dollars of assets like on-chain with that programming language. And the runner-up is Rust, which is the dominant programming language for Solana, or the Solana virtual machine. It secures around 1/10 of that, which is $20 billion on-chain, right, in terms of DeFi protocols and assets locked on-chain. And so you're really tapping into kind of the biggest pool of capital. And then that's from the capital side, and then you can also look at it from the developer side. And when it comes to developers like in the EVM ecosystem, like it also leads the runner-up, which is Rust/SVM Solana virtual machine by roughly like 4 to 6x. And another kind of interesting fact is EVM/Solidity is actually the most like active developer community / crypto and blockchain programming language on every single continent. And so, no matter what continent you go to and talk to a crypto developer, like chances are they'll know Solidity and they'll know the EVM pretty well, or that's how they got into the space. And so, to me, the EVM sidechain for the XRPL ledger, like really you're tapping into the biggest capital pool and one of the biggest capital pools in crypto, and then also one of the most active developer communities in crypto. And so if you can bring, and we can bring new apps and like new developers onto the sidechain, obviously with XRP as the gas token on the sidechain, and all the transfers are powered by Axelar as the canonical bridge. It's going to bring new capital, new developers, new users to the sidechain. And that's something that I'm particularly interested in watching as kind of EVM continue to evolve as the dominant developer ecosystem.
Thank you. That was very insightful. Just the last one, I guess. But and this ties back into your computer science background, but what are some technical differentiators that you think are going to lead the next wave of institutional adoption? And maybe even for retail, like what are some specifics you're looking at in terms of blockchain technology that's really going to change the game and drive the next growth wave?
Yeah, I think it's obviously very different for institutions versus retail. For institutions, I think obviously the answer there is, I would say, perhaps less technical, but it's more regulatory clarity, which we now have. But there's also technical things like privacy, right? And so there's an ongoing debate of people love on-chain perp dexes, but also people are debating, hey, like, is it really the fact that you see everybody's positions on chain and you can hunt people's positions in theory, is that really an environment more institutions would want and feel comfortable to trade on? Which, if you look at obviously the stock market, most of the volume and trades from institutions are executed in private, right? Like in dark pools or in private OTC pools. And so there's ongoing debates and also new products being built to enhance privacy for the on-chain products. And so that's on the institutional side. And then on the retail side, I think it's pretty clearly the defining factors there is just good user experience, right? And it comes down to latency, and comes down to making the app or making the user experience really smooth. And again, Solana is kind of the defining example there, where they've really focused their energy and increasing throughput, bandwidth, and reducing latency. And so you can clearly tell if you were trading something, let's say NFTs on Solana 3 years ago versus the meme coins that were pretty popular even till today, the user experience has like materially improved. And also, if you were to trade on, let's say, things like Hyperliquid, you can tell that the retail user experience is getting so much better, right? And so like overall, I think those are the factors that will keep pushing both kind of on the institutional side and on the retail side as well.
Thanks for that. But with that, I think that's all the time we have. Great session with you, though. A lot of insights. I'm going to look back and sort of read the transcript of this, because that was loaded.
Thank you. Thank you,
guys.
guys.